Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, March 24th. I'm a little bit under the weather here, as you can hear from the voice, so I'm going to keep this relatively short. I'm just going to show you what I'm looking at for the coming week. The S&P is in pretty good shape here, and I want everybody to pay attention to this downtrend line here. Looks like we're about to break it, and I still see channel resistance around 1580. Remember that there is a all-time closing high, I should say, in the S&P at 1565.15. So we need to make it just over this area. This area is like 63 and change. So I do think the market looks like it wants to move up into next week. If we look at the Dow actually looks even better, right? Because the Dow made all-time highs and since then has been building pressure here, I think, to move higher. NASDAQ Composite is a little bit messy. Notice that it's not been able to get up into the prior high area here. It's still lagging a bit. Same thing with the NDX. Basically, we're starting to see some of the leadership stocks a little bit kind of on the wane, while like the consumer staples and the safer dividend type stuff continues to rally. And this is why I think that we may be at the tail end of this rally here, as I've been saying. Google is one name I think that's showing some relative weakness. It's just kind of rolling over, and I think there's going to be a play here, but probably closer to the 50-period moving average support. Notice the last time it pulled back to the 50, gapped up probably on their numbers, but regardless, that was an inflection point, so I'll be watching that. Main thing to consider here, as I was saying, into the coming week is basically the channel. We have not spent too much time below the 20 MA. The other day I saw something on the web that was talking about, what distance do we have from the 200-period moving average? And this is actually interesting because the 200 MA is here. What I do as far as markets that are overbought or oversold is, if you recall, I use a 40-point differential from the 20 MA. So if the 20 MA is at 1540 right now, it would make sense that if the trend channel here is at 1585 currently, then when we get to about 1580, we get close to this, market's probably going to come in a bit because we will be 40-plus points extended. But some people are looking at the distance from the 200 MA, and that's actually very true, I think, also because the distance here is pretty great. I mean, here was probably your highest. That was 1407 up to a high here of about 1530. So 1407 to 1530, so you've got about 120 points there. And currently you're at 1430, and now you're at 1560, so there's 130 points there. So if we go a little bit higher, another 20 or so, you're talking about 150 points from the 200 MA. So these are just little things I'm looking at to see where there might be a possibility of putting on a decent short in this market. If we switch over to the profile, I would have to say that short-term money continues to be in control here. There's so many little nuances here, and I really love this stuff in terms of just showing us how it's really just mechanical trade going on with shorter-term money. Like, for instance, on Friday, you had an excess low. And notice where the low was, to the penny, to the TPO POC. This is the volume POC, but this is where the most time actually spent. And then notice that it went right to the POC, to the penny, and then we rallied. And this is indicative of when you have shorter term money controlling the market, because longer term money doesn't wait for any sort of profile inflection point to be buying. They don't pay attention to the value areas or the POCs or any of this stuff. So when you see these mechanical references on the chart and they and they're hitting just perfectly, this tells us that that the short-term money is in control. Same thing with here. Like, we opened, we rallied, and look where we paused. We paused just under the value area and we failed. So I find that interesting. The market is a little bit overextended here in terms of the profile, meaning that on Friday afternoon the futures closed at 1553.75, so they're way up here actually, almost at 1554. And yet notice that there was no migration of the point of control higher, and the point of control actually migrated, well, it migrated higher from Thursday, but I found it interesting that the point of control is actually much lower than March 20th here, which is Wednesday's action. So I think traders have gotten themselves a little bit overly long, so there could be a little bit of correction early Monday just to take out some of that inventory. So that's something I'll be watching for. Also note on Monday that the POC here is extremely prominent. It goes all the way out to end period, just like this one does. Very, very prominent point of control. Prominent just means wide, where you have a lot of TPOs. So the odds of a retest of prominent points of control are very, very high. Um, so in early trade Monday, I would think traders would be looking to buy that. If there's any weakness on the open, inventory rebalancing, coming in a bit, then you'd be looking for a 1548.50 area to be a possible buy point. And then if price was to find acceptance underneath this POC in here, below the 1548.50, that would be pretty bearish. If price finds acceptance above it, I'd say that's bullish. So whenever you have a prominent POC like that, you have high odds of it getting revisited, and you want to keep in mind that bias is going to develop relative to that prominent POC. So either price is going to find acceptance above it, or price is going to find acceptance below it. All right. I'm going to drink some hot tea with lemon and get my butt back into bed. Hopefully my voice will be better for next week's video, but that's pretty much the state of things here. All right, have a great week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.